G'day guys, welcome back to Pete's Investing. It's February 14, 2024. This is the German DAX update. So long term on the weekly we're bullish, but on the medium term, meaning the daily, it's just a fresh breakout on the bearish trend, and likewise on the hourly we're in a bearish momentum. Now there are some divergence in play, which means we're expecting a reversal, and it's already started, so let's get stuck into it. So what we have here is the weekly, daily and hourly charts, and we look at the trend on all of them, but the weekly showing a bullish momentum with the ADX 25 bullish, and our CCI 400 is also bullish with the CCI breaking above its moving average. What we do have though, let me just blow it up a bit, what we do have this CCI 150, which is our divergence indicator. You can see here that CCI is still lower than that level there, which means that there's a bearish divergence versus higher highs on the price. It happened a couple of times, and both times it's fallen off. Now currently it hasn't fallen off on the current situation on the weekly, but there is a bearish candle. Now this could just be a false break to the downside, so if it does break further higher on the price and we see the CCI also move higher than that entry point, we're going to invalidate that bearish divergence on the weekly. Now likewise on the daily there's a different divergence, and these are all independent from each other. We've got the ADX is showing a fresh bearish breakout, which is bearish in terms of trend. The CCI 400 is starting to turn down, but it hasn't broken through the moving average yet. And we do have a bearish divergence on the CCI 150, which is also showing higher highs on the price, and that's also fallen off with that big bearish candle overnight. Now that's after hitting this resistance up here at 17.054. Now it's pulling back on the daily, and the daily ADX is also showing a bearish outlook, so not looking too strong at the moment for the DAX. On the hourly, again a different divergence, independent from the others. Bearish on the ADX, the CCI 400 is broken to the downside below its moving average, so bearish on that indicator. And you can see there we had a bearish divergence here on the CCI 150 versus the price. It hit that high, went sideways for a while since our last video, and now it's fallen off again. And what we look at in terms of target on that very minimum is take it to that Fibonacci range between the recent lows to that high, and I'd like to pull a target at the very closest Fibonacci range, which happens to be the 23 and the 38% level. So I'll just draw a little, you can see that it's fallen right in there, and it's actually bounced off that 38%. Now these divergence don't necessarily mean a crash, it just means a minimum pullback possibly before making further advancements. So this is at least definitely hit that minimum requirement on the hourly. Now it could fall a lot further. If it falls much further than the 61%, then it's going to be very bearish for the DAX. If I go back to the daily, you can see there I've just drawn that range between that little range there. If I was going to draw the range on the daily, I would draw a Fibonacci range before that previous, where that divergence started. So I'd draw it back to that low to that high. And again, if I was going to draw a target on the daily, that's why I'm saying these are all independent. These divergences are all independent from each other. That'll be my daily target for a pullback on the daily if that divergence was to play out. Again, for the divergence to fail, we need to see the CCI break higher than that point there, in which case we'll see the price also break through this resistance. So they're not 100%, there's nothing in the world is 100%, especially in trading. So generally these pullbacks work at this very minimum. Again, if this broke through this 38% level and eventually broke down to that 61%, that'll be a very bearish outlook for the DAX. The same logic applies for the weekly. I'd be pulling a Fibonacci between that low to that high, and that you can see that goes back to March 2020 of the start of the lockdowns. So that's where we are at the moment. Bullish on the weekly, somewhat I would say neutral to bearish on the daily, and bearish on the hourly chart. So again, careful about trading long positions at the moment until we see more sustainable up moves, and we see the daily break to the upside, and we see the hourly also break to the upside in more positive momentum. Just some economic outlook points to consider. Recent gains were driven by positive earnings reports and hopes for easing energy concerns, However, ongoing geopolitical tensions and fears of wider European recession keep investor sentiment fragile. Key factors to watch: the Eurozone inflation. Continued high inflation could trigger further tightening from European Central Bank, impacting stock prices. Geopolitical developments, escalating tensions with Russia or other unforeseen events could trigger volatility. And corporate earnings, upcoming reports from key German companies will influence sector performance. So again, just be careful. Long term, we're still bullish, but medium to short term, we've turned into a bearish momentum, and those divergences are in play. And the hourly has hit its divergence, and we're now looking at the daily possibly heading in that same direction and hitting its targets. So if you got value out of the video, hit that like and subscribe button, hit that notification bell. Thanks for watching, and if you want to get further support and trading ideas for shares, support us more on the Patreon page. Thanks for watching, and see you in the next video.